Did you have a chance to look at those Chinese stocks that I sent you over?
I did, and they look juicy on the fundamentals.
You want to pop that up here and let everybody get a
Yeah.
taste?
This right here is indicating how expensive a stock is compared to their competitors, their comp. So the higher the score, the more expensive it is. But this only works if you know what specific comps to compare them against. So Chinese stocks, I think there's only three you can: Alibaba, JD, and PDD. So Austin's like, is this how's a Chinese stock look in your model? I'm like, it's freaking dirt cheap because if you can see here, it's got a score for next year 15-15. Really interesting that JD and Alibaba have nearly identical scores when one's worth 37 bill, one's worth 210 bill. That just shows how the market thinks it should be aligned on the fundamentals. Even though Alibaba was trading at 8% revenue growth, JD's 7%. However, Alibaba's free cash flow margin is 16% compared to JD's 3%, but the score is the same. Why is that? Alibaba's trading at 9 times their free cash flow, JD trading at only 6 times. So JD is trading at a discounted valuation compared to Alibaba. So that's why, even though the fundamental profile for Alibaba is actually significantly better than JD, this score right here is factoring in what kind of discount the market's trading JD at Alibaba. So that's why this really normalizes everything you would want in a fundamental. So right now, Alibaba and JD have identical scores, and they're trading really cheap, where 9 times, 6 times free cash flow. That's incredibly cheap for a company that's still growing the high single digits. That's profitable. The biggest issue, though, with Chinese names isn't the fundamentals. It's the narrative story, where a lot of people have gone burned. They still can see their scars on investing in Chinese names the past 10 years, that they missed out on the US tech names. And because of that, they're like, I'm not going down that value trap again, which absolutely it could be a value trap. I really don't think that Chinese names really are going to run until the election, because this will be a massive headwind on a Trump-led presidency, where Trump is really hard against China, and he's kind of leveraged a China trade war, and the volatility associated with the Trump-led presidency is at the expense of Chinese names. And my experience indicates anything under a 20, it's a slam buy. The soft narrative is geopolitical risk that won't be going away in the next 2 months until after election. And you have to ask yourself, tell yourself, there is going to be a headwind where Amazon and Mercado Libre have nearly identical 30-point scores for next year for fundamentally. So wow, you would not assume that, again, because look at the fundamental profile. Amazon's growing in low teens with 10% free cash flow margins. However, Mercado Libre is going 34% with higher free cash flow margins, but the score is saying it's trading at a similar valuation. Why is that? That doesn't make sense when the fundamental profile is so much better than Mercado Libre. It's because Amazon's trading at 67 times PE when Mercado Libre is trading at 90 times, where Amazon's trading at 16 times or 14 times next year's EBITDA. Mercado Libre is trading at 25 times next year EBITDA. I don't think Alibaba will ever get the same multiple as Amazon because there's a geopolitical risk. But there could be an argument. I'm not saying that there is one or there should be, but an argument could be made that maybe it should be the difference between them. It should be a 22, not 15. So if that's the case, there could be a 40% move in Alibaba, which will result in 250, 260 the stock price. If the market believes that geopolitical risk is kind of overstated in the Trump-led presidency, there should be some, maybe in the same ballpark as Latin America, but not to the same extent. If that's the case, this Alibaba and JD can run 35 to 40%. And it won't be the same kind of risk as Mercado Libre, but it'll be the same kind of category, and you can kind of digest it a bit.